Well, welcome to the Retirement Authority. We have a special guest with us today. We're going to be talking about a topic that many of you have top of mind, which is, are you paying too much in taxes? But really, the other question you should be asking yourself is, are you with the right accountant? So I have with me today Roger Volk, CPA. So Roger, I would like to go over this first slide with our viewers today in terms of choosing a proper tax professional, because not only is the question, am I paying the correct amount of taxes, right? And everybody wants to pay less than what they do, but sometimes they're not necessarily with the right fit or the right person or the right chemistry or the right professional. So could you walk us through some of the issues and areas that individuals should be thinking about in terms of collaborating with the right CPA?
Yes, that's a good question, Mark. I really like that thought. Show some criteria that are necessary in choosing the proper tax preparer. That is so vitally important, Mark. Choosing the right preparer. 6 criteria. I'll go through them quickly. The first and most important is a referral. Now, if I were wondering what to do with my taxes and I did not know who to go to, I would find the best and most astute tax person, most astute business person I know. And I would ask them, who do you use for your taxes? Because I feel that if they're good, astute tax accounting people or business people, they're going to know and they're going to be able to advise me. So the first criteria in choosing a tax consultant is referral. Look around, ask people who they use, and that's the first one. The second is experience. When people go to look for tax preparers, looking for experience. Now, I've had people come in here and say, oh, last year I had a CPA, a tax attorney, a big one in a corporate law firm in Boston. That's not what you want. You want a tax preparer, a tax person that has experience in doing individual tax work. That's second. The third is personality. Gosh, you want to have somebody that you can joke a little bit with and you can talk with and you can really have a half decent good time in trying to save as much taxes as you can. The fourth is fee structure. And that's very important. You want to discuss with your tax preparer before you make a commitment what they're charging and what the fee structure is. The fifth is education. Not that much of an importance. If they're doing tax preparation, they're doing tax consulting, they probably have some kind of an education, but that's still one of the criteria. And the last one is convenience. So people, I have clients all over the country. Now, what does that mean? It means that they know that I'm going to do the job for them. Doesn't matter whether they mail the stuff to me or whether they come in and see me. So convenience is an issue. And some people who don't have a lot of tax matters involved with doing their return can certainly find somebody local, but make sure you look for a referral first. That's the most important.
Roger, thanks. I think those are really important. Again, very few of us really want to pay more taxes than we should.
Nobody does.
Right? So, so we want to make sure that, we're doing what we're supposed to be doing, but no more than. And making sure that it's the right chemistry, the right fit, the right personality is really important. But sometimes people don't recognize or understand that just because last year or the year before's taxes were done, it doesn't mean that that's over. You can actually sort of, take a look at and get a second opinion of those taxes. So Roger, if you would give us a sense of, because I know that you advocate for this a lot, why it's important to get a second opinion and how one should go about doing it.
I am very strongly in favor of that. And I've said that many times. I'm saying this not so that I can have people who are listening come running to my office. I'm doing it for their best interest. And if you went to a doctor and the doctor said to you, you need a heart transplant. You need something in a heart transplant. What would you do? Would you just say, okay, let's do it? You'd go seek a second opinion. Taxes are the most important financial aspect of your life. Therefore, you should seek second opinions whenever you can. It doesn't hurt. You go to somebody, you say, I want an opinion on what, you can do 3 years. You can go back for 3 years. So you take your last 3 years tax returns, you go in and you say, I want an evaluation of my last 3 years returns. And they're gonna. And the reason I say 3 years is because you can only go back 3 years to amend a return if things have been missed in the 3 years. But a second opinion is so vitally important. I mean, it doesn't cost. Usually, accounting firms don't charge for second opinions. They take a look at it because they're hoping that they find stuff that they don't like in there. Then these people will then be a client forever. So second opinions, most important. Most important. Go in there, take your stuff, and seek somebody else. You can do it confidentially so that nobody knows that you're in there. Your present accountant doesn't know that you went to seek a second opinion. It's vital, Mark. I think it's absolutely being taxes being the most important thing financially in most people's lives is what you pay in taxes. And most people want to pay everybody wants to pay the smallest amount of taxes. So seek second opinions. It's vitally important.
So, Roger, one question that might be posed to you if you do go about and get a second opinion, and you do find out that it's in your best interest to, if you will, reapply or redo the taxes, does that raise any additional flags with the IRS for that individual?
Well, I can't say definitely no. I can't say definitely no, but it depends on what you're amending. So if all of a sudden you've done your tax return and you've taken contributions, for example, because that's one of the toughest areas, and you say, oh, I forgot a $20,000 charitable contribution, you got a pretty good chance that that's going to bounce and it's going to be reviewed and looked upon. But if you do a normal situation where, gee, that when you did the tax return, you forgot to put in certain items that are very important, no, I don't think there's a red flag there at all, unless it's a very unusual item that you're amending the return for.
Great. Just wanted to follow up. So, what I'd like to do is there are some, usual frequently asked questions, and I'd like to refer to that. So, Raj, there are 3 frequently asked questions that, you and I think are some of the big ones. The first one deals with, the topic of Social Security. I mean, you deal with a lot of people who are retiring or already retired, and they're, asking you the questions about Social Security. What kind of advice or guidance do you give them?
That is probably the most common question for people who are turning in the 60s, mid 60s, and higher up. When should I take my Social Security? Okay, now there are varied opinions on that. So I'm going to tell you what my opinion is. It's not necessarily always the best one for people, but when I did the radio, I would give advice. It was more generic advice for everybody, when in fact, really and truly, that's not the case at all. When you're 66 years old, you can start taking your Social Security. You don't have to take it, and you can wait. And each year you wait, it increases about 8% or so of your money. So if you want to wait until you're 71, you're at the maximum. You've also given the government 6 years worth of Social Security that you haven't taken. Now, starting in 71 years of age, you now get more money. I agree, but it takes 12 years to break even, to get the money that you gave up when you were 66 to 71. I got to tell you, Mark, I don't like that. I think when you're 66 years old, that's when you go ahead and you take your Social Security. You take it. That gives you, say you're getting $30,000 in Social Security, or $25,000 in Social Security. 6 years, 150 grand. You gave the government $150,000, and now in 71 you're going to get a little bit more. In 72 you're going to get a little bit more, and you don't break even until you're 12 years later, 83 years old. I don't know if 83 years old I'm going to be able to spend my money.
Yeah, there was actually a study done last year from United Income that indicated that 96% of people take their Social Security at the wrong time. And their conclusion was that, yes, many should wait till they're 70, but there were 43% of people who should be taking it somewhere between full retirement age of what you refer to as 66 or 67 and 70. So I think the real key is, and hey, we have 7 different calculators that you can do. You really, as Roger said, it's generic information, but you need to customize your own strategy to find out how you're going to maximize your Social Security benefit. So the real key here is just, talking with your financial advisor and your accountant and getting the planning together, and then coming up with whatever the answer is that is best for you.
That's why we make a living, Mark, you and I, because you do financial advice and I do tax advice. And
Yep.
that's a very important question. When do you take your Social Security? But
Yep.
there's exceptions in there. You know, there
Yep.
are exceptions. Should the wife take it when she's 66, or should she take half of her husband's? That's, you know, I could get into a lot of detail in here, but better
Yeah,
off just saying,
if
call
you're
Mark.
interested, yeah, I mean, they're over, believe it or not, Raj, there's over 567 different claiming strategies on Social
Oh,
Security.
geez,
So
life.
if whoever's viewing today, we have numbers of videos specific to Social Security if you wish to view those. But so
Well, basically speaking, turn your age and talk to your financial advisor
right,
to
right.
see when to take the money.
Absolutely. You know, the second one's an interesting one. I know you and I have heard this a lot. Somebody comes into the office saying, "Oh my, you know, I got such a big refund.
Ah,
Wasn't
so
that
often.
great?"
Yeah.
Tell me about that one,
Oh
Rob.
my God. People come in, I say, well, how come you came in here this year? Why aren't you with your previous accountant? You know, they said, well, I was really happy with him because he got a big refund for me. Big refunds means poor tax planning. What does a
Right,
big refund mean? A big refund means that you gave the government money during the year, either through withholding or through estimated taxes. Those are the two ways to pay your taxes. Estimated taxes quarterly or through withholding, whether it be a withholding from your pension or withholding from anything. That's what it is. And when you get a large refund, you've given the government the use of that money and you haven't had it. Now, let me preface that by saying that many people want big refunds. They want refunds. I mean, that's what they do. They're willing to forego the fact that they're giving the government the use of their money because now they've got this refund that that they paid all during the year, and all of a sudden they've got the money now. They can pay for their country club. They can pay for their house insurance. They can pay for their automobile insurance through a forced savings.
right,
It's
right,
not the wisest thing to
right,
do, Mark. We know
right,
that. I'd rather have you take that extra money and put it into a savings account and earn interest on it
right.
than go ahead and give the government the use of money. A small refund, okay. 1,000, 1,500, 2,000
Yep.
bucks, that's fine. But I've got one client that gets $50,000 refund. I say, Jesus, don't tell anybody who does your tax return. I don't want anybody to know that I'm the one who's advising you to get a $50,000 refund. Oh my God. He says, you know what? This is my forced savings. I know that I'm putting it away during the year. It doesn't bother me putting it away during the year. And that covers all my country club, all the big numbers that I have to pay at
Right.
the end of the year. So as I said, you know, there's advice for everybody and everybody's different. But generally speaking, you don't want a large refund. You're
You know,
much better off.
in concert with that, and sort of a follow-up question, because you mentioned it, the whole process of paying taxes and planning throughout the year how to pay taxes is interesting, because I'm sure that many of the people that you work with, you know, they may have been working for somebody before, or, you know, taxes were paid for them. Now they're having to pay estimated quarterly taxes. So how do you coach or educate your clients to do that, to make that transition?
Well, you know, that's not an easy question. Now, if people are now, when they work for somebody and they had taxes taken out of their pay, then it was easy. But now many people have now become self-employed. They're moonlighting, they're doing extra work, they're getting their paychecks without anything withheld. It's vitally important to talk to their tax preparer, to tell them that, hey, I'm not paying taxes on this additional income. Please set me up with a quarterly payment schedule. And that's what the accountants do. That's what I do for a living. I set up payments like that for people. I look at the previous year. I see what the previous year was. I try to meet that previous year by making estimated payments. And I don't all the time do 4 quarterlies because a lot of my clients say, I don't want to do 4. I'll never remember 4. So what I like to do is do like a couple, like June and September. So that's just my opinion. And you pay a little bit of a $10 penalty or something like that sometimes, but it makes it a lot easier for people to come up with the money. The second thing is you ask the people when they're going to be, you know, when they're going to have the money to come up with it. Some people don't have the money in June and September. They have it at the end of the year. They're salespeople. They have their big income coming in November and December. Well, then they've got to adjust accordingly based upon their estimated tax.
Roger, that's great advice. You know, what I also offer out to some of my clients is if something has changed dramatically throughout the year and they are supposed to be paying quarterly estimated taxes, I recommend that they at least call their accountant in the fall to make sure they're on track and
Right.
doing the right thing, because they certainly don't want to get a surprise in April.
Well,
But
that's what I said ahead, Mark. The taxes are the most important aspect of people's lives
Right.
financially.
And you know,
So
we
don't
talk
be afraid
about
to call them.
we talk about from a health perspective being your own advocate. I think from a tax perspective, you have to do the same thing as well. And you know, as we've talked about some of the big questions here and some of the big issues, it's making sure you're with the right person, doing the right thing, asking the right questions, and understanding, you know, where you are and what you should be doing. I really appreciate, Raj, you taking the time. For those of you who have an interest in trying to figure out how to customize your own income plan in retirement, how to maximize your Social Security income, certainly click on the link below to become my client. You'll learn more about our process and how we work with people. Raj, could you give the folks some contact information for you as well?
So if anybody wants to get in touch with me, they're most welcome to do so. My office is right near where your office is. It's in Seaport Landing in Lynn, Massachusetts. And my telephone number is 781, I almost forgot it, 781-592-0500. 781-592-0500.
Raj, thanks. And
My pleasure.
for those of you who have viewed this, I really hope that you'll subscribe to our channel and tell your friends about us. I hope that you've enjoyed this session, and I truly hope that you enjoy your retirement journey.